Ladies and gentlemen, this should recording. Can you look at that shit good? Alright, cool. Alright guys. So this is gonna be real quick. Tomorrow I'm gonna go over more details about Ethereum, Bitcoin, the S&P. But what I'm gonna do real quick is just point out what happened yesterday, this morning. But like I said, tomorrow I'm gonna go give more details. Something I want to point out right now that I just noticed. So this Ethereum, there's a time and date, Arizona time, and we're in the 1 hour candle. So the S&P 500, I said will most likely. Let's start off with the S&P 500. So last night we were hanging above this 50 Fibonacci. It's right here. And notice how we were hovering above it. Actually, no, it was right here. My bad. There's a little general time high, and then I said we're most likely gonna come to down test this region here if we didn't cross. Where's it at? 19, 20. So right here, I said that if by 11:45 to 12:30, if the S&P 500, because this is S&P 500 1 hour time frame, I said yesterday, and I'll put my graph on. That way you guys can see what I'm talking about. But yesterday I said, if the S&P 500 didn't break above this price, which is 6,500, between 11:45, 12:30, we're gonna start dumping on down and testing this support that my indicator is showing me here. And then from here, it goes at 2 o'clock. Bullshit here as the market gets ready for the data at 5:30 tomorrow, because there's gonna be big data. We're gonna start creating support and going on up. What I didn't think about too is that also, since it's the last day of the month, which that I knew, but I didn't think how scared also investors would be, because you do gotta think about how this is the last day of the month and we're coming to a 3-day weekend, and just the fact that it's the last day of the month. So investor will be more scared and also cut off the data how it's gonna come out. Regardless, the manipulation that it caused, investors were really scared, and that showed you right there. Because a regular market, when there's big data coming out, for example, when PAL or it's just big data coming out, the market, once it's dropping, it creates support around 2 to 3, 3 to 4 ish, because that's when the first of all the S&P closed the 12-hour candle at 2. So from 2 to 4, it'll start creating support and rising on up, because there's always data coming out at 5:30 in the morning. The point one, this, and just a coincidence, this last data that came out was at 5:30. So normally the market would cover expectations. They're excited. So the fact that at 1 o'clock actually broke the support, and it broke that much at 2, and it closed right here at 2, that was telling me the market was actually scared. So if you see right here, it's 12 o'clock. So it wasn't even 1 o'clock. The fact that at 12 o'clock it broke down here, and then at 1 it fell down here. If I was awake, that would have been a red flag for me. That would have been telling me, hey, the market is scared. They're getting ready to dump, most likely. And in here, notice it was giving you all the entries. This was your entry right here. And I'm gonna point something out that I didn't see, and it happened with the 4. It was a 3 candle box in a 4-hour time frame, and I would have showed you how you would have used that 3 candle box in the 4-hour time frame to get yourself in the entry and go for itself if you're a day trader. So here we have 1 o'clock, 2 o'clock, and this is what I mean. That once we get to 2 o'clock, from 2 to 3, when there's data coming out, it'll start creating support. And as the time comes closer to the data coming out, the market gets happy, it rises up. Once the data hits, good or bad, it would have fucking snapped through that. You would have seen the market back up here and fly and create an all-time high. But the opposite, it creates a resistance and that support. Boom, right when the data came out, breaking this 1 hour time for 1 hour Fibonacci right here, along with a bunch of other fucking lines that I have right here that I'm gonna show you that yeah you would have been confused. So now I'm gonna go to a 4 hour candle. So this right here is what I call the 3 candle box strategy. The 3 candle box I call them because it's 3 candles, 1, 2, and 3. Normally the first candle, depending where it's coming from, top to bottom, bottom to top, it gives you your first support or resistance. So since we're going down, it marks you the support. The second one will mark you the resistance. From there you box it up. And the last one, depending what time frame you're on, you wait for the last 3 hours or so, or see where it's at and what data is coming or gonna be coming out towards that time. So since this was a 4 hour candle and this 4 hour candle for the S&P closed at 6 and the data came at 5:30, I knew that depending where it was inside this box, if it was above, your 5:30 for sale would have been triggering some sales right here in this region inside this box. That way, as the market got the bad news, it would have triggered and captured and complete this 3 candle box. Normally, you have shit like this where you don't really know how the market was gonna react because it was gonna be very volatile, bunch of wicks up, this one wick, and then. But once you have a 3 candle box strategy, it's much clearer, especially if you know, think about it, it was the only data really that market was looking forward to. It was the end of the month, so it was gonna be so clean. It wasn't gonna be shocking. We were a high, all-time high region, so it wasn't gonna be very it wasn't very volatile, very crazy. It was very clean. That's what I mean by this. So I'm gonna put my box. There's my box right there. Also, on the 4 candle, we were on an uptrend. See, the S&P was on this uptrend since down here. See, so all these were telling you, hey, this is your breaking point. Either we going up, continue with the trend, this we were on the 4 candle, and still be bullish, or we're gonna dump. And I told you guys to watch my videos. I said if we do dump, we're gonna dump in between these two right here, in between these two weeklies. That's what I mean by that weekly. There's a weekly here, we close a week here, and we close a week here. I mark it up in light blue lines. That way I know, and then we just close the month right here. So I know once the market opens, this region to hold is going to be important. Even if we break it, getting back above it is going to be now hard because it's a month. Anyways, too much detail. I'm going to take this shit back off again. But a curious thing that I noticed, so I said that most likely if we fall down, we're gonna close right here. Also, because it's very important tomorrow, next week, because we're weekly wise. Let me go weekly wise. Weekly wise, we've been on this trend line for the S&P. I believe is this one right here. Let me see. Yeah, it's this one right here. This, watch, I'm opening it wider, that way you guys can see it. So this blue line right here is the top of the trend, and this is the bottom of the trend, and it's an uptrend. So the fact that we close, then we're going back to the 1 hour candle. The fact that we closed right there, and that's where the weekly line's at. Any bad news next week or whatnot, breaking that trend line, again, it's gonna be another red flag, and your stop is gonna be this 12-hour 50 Fibonacci right here. See, 12-hour candle 50 Fibonacci. But we still got a lot more cushion into it, but it's just a little slight warning. But something interesting that I noticed, that Ethereum, look at Ethereum. Ethereum's acting not bearish at all. And let me tell you what I mean by that. So the market started dropping at 12 o'clock, right? And if you see Ethereum, This was where I was talking about how Ethereum was still telling you that it was still bullish, but it was still hanging by a thread because this is a 50 Fibonacci and a 1 hour candle. All right. So notice the fact that it lost that support at 12 o'clock when the S&P was falling down, but look where it stopped. It stopped right here at 2, right? But at 2, from 2 to 5, it was bullshitting, right? And then we had that drop, and that's what it is right here, 6 o'clock in the morning. But look what it does. It didn't break. It didn't break. It didn't do nothing really to it. Yeah, it dropped it, but look how much time we just pretty much been consuming here. Where the S&P, it dropped heavy, where like it's really gonna lead a lot now to really get investors to push this up next week or the next 2 week. Either by the end of this weekend, somebody's gonna tweet something bad, whether it be tariffs, whether it be something bad, or he or they is gonna have to tweet something good this Sunday or Monday to have investors, the market open happy and whatnot. I don't know what data we're having next week, but whatever data we have these next 2 weeks, it has to be good for the S&P really to go back to its 6,482 price that it just broke. Because because otherwise they're just consolidating these all-time highs. If you notice, we just been creating new all-time highs, coming back down, creating new all-time highs, coming back down, creating new all-time highs, coming back down. When normally you have these moves, like these, and once you start having these drops, and they're drops, they're not fucking really for fucking weeks and weeks. Look at this shit, just since August 22nd, we've been pretty much here in the same fucking price. Not even yet creating all-time highs, but this is bullshit. This is really, and at the same time you're making crypto moves, and all you really are doing is doing discounts for the rich, for the banks, and putting fear into the market. So it is because they really know what numbers, how the market is really doing, how the economy, the real numbers. So they gotta fucking throw all these fucking nonsense with tariffs and wars and this and that, so we can panic and sell our stocks and our cryptos and our whatnot. Um, But yeah, so far, tomorrow or Sunday, I'll do a recap of everything and break everything more down. And I am planning on hopping on with 2 of my friends to go over pretty much all this shit right here. The boxes, these colors, all this shit right here. What they mean, the dotted purple lines. I like to dissect the market, and I'm a visual guy, so I like to see the market in with actual detailed, not the basic support resistance trend line that everybody does, which is cool because it works for them. But I tell myself, and I have my own way of reading the market, predicting the market, especially time. Time's really important, especially when it comes to crypto. Think about it. If the market already has all that data planned, scheduled, and it tells you how much that data is ain't gonna impact the market based on the folders, it says high, medium, low, all that bullshit. And anytime some big guy, like for example, what's that fuckface that bought shitloads of stocks from the United Healthcare, and the stock rose like crazy. So shit like that makes those stocks move. When it comes to crypto, you know how there's 6% of fucking crypto left. You would think by now this baby would have been the fucking 6,000, 1,600,000, 700,000 Bitcoin. Ethereum would have been the fucking 20,000, 30,000, but they're not because they're getting manipulated. because they know if the S&P flies, crypto's gonna fly with it. If you can't see the connections, even though they don't move alike and blah 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 blah, trust me, they're synchronized. Um, what else? Yeah, so I'm gonna go and maybe start doing playlists, break everything down how I see the market, so it can actually make sense to people that do watch my videos and whatnot, or try and watch my videos. I'm out. I said it's gonna be a short video, and I'll hop on later on or tomorrow. You guys take care. Thank you for the comments. Hi, Ola. Um, Andrew, buy XRP. Yes, sir. Buy XRP. Already have some, sir. Already have some. And still think of buying way more. You guys take care.